President Trump announced this tariff rate, 25%, in a post on Truth Social earlier, and he said that while India is our friend, their tariff barriers have ultimately been too high, and that's why he's going to go in with this rate. He also importantly added that there would be additional penalties for India for buying Russian military equipment as well as Russian energy. The administration has been threatening to impose a so-called secondary tariff on nations that do business with Russia, particularly when it comes to Russian energy imports. We're still waiting on future details on exactly what that rate would be or when it would be implemented. President Trump did say, though, that that 25% rate is set to go into effect on August 1st. And we have to keep in mind, India was really prioritized in these talks. You'll recall Prime Minister Modi was one of the first foreign leaders to visit the White House, and India actually made some concessions pretty early on. They agreed to drop their tariffs on an array of goods. They pledged to boost U.S. imports when it comes to LNG and industrial products. But ultimately, it appears that the talks sort of broke down towards the end, with administration officials saying that they ultimately needed more time in order to get a deal done. And at this point, it seems like President Trump is just setting this rate moving forward.
Can I assume the president was not listening to Bloomberg radio yesterday when we said that more iPhones are being produced in India than China for the first time?
Well, there's a lot of different factors here, perhaps, that the administration is looking at. One is, of course, they want to divert manufacturing into the U.S. They want to reshore production, even if that does mean that it's not going necessarily towards China, and we're seeing companies divert towards India. The administration is really focused on getting domestic manufacturing done. And ultimately, President Trump is really talking about the goods deficit when it comes to this. The USTR last year, I pulled the data for a $45 billion goods deficit with India, and that appears to have been too much for President Trump in these negotiations. And also, this rate for India, 25%, that is definitely higher than what we had been tracking and where the trend had been going. Take the Philippines and Indonesia, for example, which clinched 19% tariff rate. So 25% is considered to definitely be on the high end here. Also, when you just had some big recent announcements like the EU and Japan coming in at that 15% rate.
So it's interesting, Tyler, Josh Wingrove of Bloomberg News is out with an interesting item today, basically saying these trade deals that President Trump is announcing, there's really few details here, and it's kind of hard for the market to understand what's really going on. It's hard for our partners to figure out what really they signed up for here. What do we hear out of the administration as to, I don't know, like actual documents, actual details? What are they saying?
Right, exactly. We are still waiting on the finalized text of many of these deals, which we know takes time. The administration has repeatedly put out fact sheets that outline what the U.S.'s view is, but what's really critical is that we see those joint statements between the two trading partners outlining exactly what was agreed to and the mutual understanding is when it comes to the trade provisions. And you're exactly right. These are frameworks, and while the administration is touting that they were able to get those top-line rates, those top-line numbers out on an expedited timeline, we should note they did get those done pretty quickly. It really is those details, like those sector-specific tariffs, how that's going to happen. Also, a lot of big questions here when it comes to the capital investments that are included in these announcements.